Good morning students. Today we are going to discuss about REST, basic accounting terms. So first is purchases. Purchases mean when you start a business you have to buy the raw material. But there are difference in manufacturing concern as well as in trading concern. In manufacturing concern, purchases means purchase of raw material because you have to manufacture the goods. And in trading concern, purchases means purchase of goods for resale purpose because in trading purchase and sale would be there. So purchases include two types of purchases. One is cash purchase, one is credit purchase. Cash purchases as well as credit purchase, and if there is any defect you have to return it to the supplier. So total purchases is equals to cash purchases plus credit purchases minus purchase return. Second one is sales or revenue from operation. When you transfer the ownership of goods and services to other person, to the customer for the price, is known as sales. So sales also include you can sell the goods on cash as well as on credit, and if there is any defect the customer will return the goods to us. So net sales equals to cash sale plus credit sale minus sale return, means we have to the customer will return the goods to us. The next is stock or stock in trade. So value of those goods which are purchased for resale and are still lying in at the still lying unsold at the end of the year. That means the stock which is held in the firm is known as stock. Stock may be of two types. One is opening stock and one is closing stock. Opening stock is that stock which is held at the beginning of the year, and closing stock which is held in the firm at the end of the year. So next is inventory. Inventory may be of closing as well as opening inventory. So inventory, these are of four types. First is raw material inventory. Raw material inventory in a manufacturing concern, you have to buy the raw material, and because whenever you start a production there is a raw material needed. So the stock of raw material is known as raw material inventory. Second one is work in progress. Whenever you start the production, there is a stock is in progress and still are not finished, or you can say it is a semi finished product, so that is known as work in progress. Third is finished goods. Finished goods, the stock which are outside the boundaries of the production are known as finished goods and are still in sold. Fourth is stock in trade. Stock in trade are those goods which are still in stock and are unsold and are lying unsold at the end of the year, are known as inventory. Fourth, next is entry. Whenever you record the transaction or entry in the books of accounts, any kind of account you record, any kind of transaction, any kind of event is known as entry. Next one is insolvent. When a person or a firm is not liable to make the payment to their outsiders, to their debts, or you can say if you are not eligible to make the payment to your liabilities, then it is known as insolvent. Solvent is a person or a firm is in a position to make the payment to their debt, means he is capable to make any kind of payment to or any kind of liability payment, that is known as solvent. And last is GST. GST is goods and service tax. This is an indirect tax. Many kind of indirect tax are replaced with this one. So it can be paid at the time of making the purchase, or can be collected at the time of sale also. So GST maybe interstate GST, inputs GST, outputs GST are also there. So these are the basic accounting terms, and I am sending the notes to you and you have to prepare it.